Hi, welcome to Market Alert for Friday, the 27th of September 2019. So, third day that cryptos have tumbled, and apparently it could be manipulation of the futures contract, the CME one, as it heads for the settlement today, which is the September contract. So, the futures market in Chicago forcing prices to the downside is basically what's driven prices lower, stated by this article. And if we look at yesterday, we'll start off with the daily. We can see that we took out the 200 bar moving average, which is crucial. And as I set up these lines earlier on in the week, this is where prices could quite easily move to on the downside going forward. So keep a close eye on this. In the 4-hour chart, we saw prices break the recent low of 8,012, but then we saw buying coming back into the market here, which you can see there holding prices. That said, overnight prices are rounding over as we head into the September expiration. Really, it shouldn't affect things, but this is exactly what they've done with the gold and silver markets, where they can manipulate the physical price by using the paper, and the paper obviously is a euphemism for the futures contract. So let's see how this pans out as we head into expiration today. We may see a bounce, but yesterday prices moving higher initially. You can see this trading up to the scalp. The upside is a bit of a struggle because you've got everything against you with all of the daily, the 4-hour, and the 15-minute all being below the 200 MA, the black line on the charts. So the market managed a quick move to the upside there, and then we headed back to the short side, which is obviously the best side at the moment, and we see prices just sailing straight through the scalp level. We then see them buying it back very, very quickly, and that's a characteristic as well of this market. So we see prices coming all the way back, and if we just have a look here, the maximum in this trade where markets actually moved to the downside, or the maximum that could have been made available, was a $350 move to the downside. That said, would have been very difficult because the market came back very quickly as prices were bought up at these levels. We then see the market put in a buy signal, and again this shot up, got resistance to the left here, and you can see the market then selling out at this level as prices are brought back. So all of a sudden the market's ignited, and then again the short side, we see prices moving down sharply, and the size of the move was down to this level here, around $400 to the downside there for this final move. Again, I've just shown you the extreme of what was in the move as the volatility increase with prices moving to the downside there. So let's see what happens during the expiration today as prices then bounced. You can see they're moving back to the upside there, a bit of a bounce going on. And there you go, I was going to say there is a buy signal down here. There was yesterday. So you can see prices moving back to the upside as well. This is the dead cat bounce scenario that we see prices moving back up. And unfortunately, as I scroll forward, there's again, that's that rounding over that we've got at the moment. So a lot of pressure on this market until the expiration, which is lunchtime, or 10 o'clock, I think, US, which will be early afternoon when this contract will expire. Well, some good trades there yesterday. Certainly the volatility once the market broke that support and came out of the sideways move there and then headed to the downside. And meanwhile, in the stock markets, things not looking good here either. We had bonds were bid higher, and then stocks slid, and then as ever, we'll just find the chart. I'll get the right one. There we go. We're brought back before the close. I'll start off with the daily chart. We can see their prices are stuck in a sideways range. The repo rates have gone up on the overnight as well. They're 95 billion now instead of 75, and there's no end in sight in providing liquidity for the banking sector as well. There is something seriously wrong, but they're not saying what it is. Why for the last 10 days the Fed have been printing and supporting the liquidity in the banking system, nobody knows. Whether it's something to do with Deutsche Bank or not, I don't know, but something is going on. However, it hasn't made its way to the stock market yet because it's rigged, and they're holding prices as we can see here. Corporate buybacks are at all-time highs as well, so the only people benefiting from these rising prices are the directors of these companies hitting targets and then getting their bonuses. No surprise there either. So at the moment the Dow is stuck in a bit of a sideways range. Yesterday we see the market kick off with some selling. You can see the selling there as prices then move lower and all the way down until we find the market bringing in some sort of support, which we can see here. They get the classic bounce as we come off the lows to the high there, 76%. There's your buy signal. The market then moves up to the 50 bar moving average, pulls back through, and then continues up to the 200 bar moving average there. So you've got prices moving higher. This signal here is just a duplicate. You're already long off this one. If I just mark this one up and show you, already long on the upside there. The market stops at the 50 bar, and then later on in the session we have another one, but this is incredibly close to the 200 bar moving average. Has the potential to fail. The market comes back to the 20 bar moving average, but then just turns around and moves higher, which is a shame if you have the fixed stop. But if you pull the stop back just a little bit more because of the DP level there as support and the 20 bar, then there's a chance of actually getting a bit more out of the trade. Or you just have to work on the basis that not everyone is going to work out, and then play it as is. Or when you've got a situation where you've got the 200 bar moving average and the entry point is beyond it, then there's a good chance the market will come back and retest first. So again, there are many options to actually play the trade there. So prices have come back through the 200 bar moving average. They failed to hold twice, and we can see now that they've moved lower on the overnight and till the early hours, and then we've got the market trying to pump higher. And at the moment they've driven through the 200 bar. See, it's taking professional buying to drive through these areas and through the DP level, and at the moment the market's sideways too low. It's got to hold above the 200. Is there any news to move it today? We've got personal spending, core PCE, and that's really it today. So not a lot. No, nothing really. 130 is your news. So again, don't be surprised if they take advantage of just driving the market to the upside. Meanwhile, in implied volatility, this was up slightly yesterday because of the volatility from 1460 to 1484, still above the 20 bar moving average, which means that there is still a potential from the implied volatility point of view to have a bit of a shakeout here. The market's due for one, there's no doubt about it. These shakeouts come a lot more frequently than they have done since 2009. Every so many weeks we seem to be getting shakeouts in this market, so always keep this in mind as well. And given the backdrop of decrease in interest rates and the 95 billion now on the overnight markets, it's staggering that this market hasn't made any progress to the upside. Even the prospect of a trade talk, it was the only thing that managed to move the market back yesterday, but I think there was a bit more involved in this, i.e. plunge protection team as usual, bringing prices back to keep the illusion alive that everything is well, when frankly it's far from it. Meanwhile, in the pound, yesterday prices finding a bit of support after closing below the 20 bar moving average, and prices starting to move higher on the overnight there. So yesterday we see prices going back through the 50 bar moving average and then moving lower, also closing below the previous day's close, all the way down to the S1 where the market found support and then came back and then got into a sideways move as Parliament, the clowns down in London, in Parliament, the market then just drifted sideways, nothing to motivate or move the market any further back to the upside coming out of Westminster yesterday. We won't even go into that. So yeah, the pound moving back, and we see prices sitting at the 76% retracement there, finding a bit of support overnight, but very quiet there at the moment, waiting to see what Johnson's next move is going to be, I suspect. Okay, that will do for this one. A lot going on at the moment, some good trades around in both sectors. We'll see what happens today with the expiration of the CME futures contract for Bitcoin, and what news can be conjured up to keep the markets on the highs as far as the stock market is concerned. And with that, thanks for watching. See you in the next one.